Start your day with It's the Business. Here's Phil Dobbie.
Well, less than 3 years ago, Lex Greensill was excited to have a big slew of equity backing for his invoice financing firm. That meant it had a value of $1.6 billion.
We are confident that we'll continue to stay well ahead of the curve and innovate and deliver the solutions that the market needs.
But this week it all came crashing down.
Finance is often described as the oil on which, the lubricating oil on which capitalism spins. And this is a case where the oil's been cut down to the stage that the pistons have frozen.
Yes, this week Greensill has gone into administration and it's impacting a lot of companies that had dealings with them, including Liberty Steel. Could this be the beginning of the end of steel production in the UK? I feel like that has been said many times before, but maybe this time COVID and Greensill has put the final couple of nails in the coffin.
The reason people moved their steel mills to China was cheap labour. And you therefore cut out the workers back at home in America and the UK, paid Chinese workers a damn sight less, put in the same capital technology in both locations and made a mozza.
Yeah, Steve Keen joins me today to talk about the collapse of Greensill Capital and what it could mean for the British steel industry. Plus, a year ago today, the World Health Organization declared COVID-19 a pandemic.
Since that day, nearly 30 million Americans have become infected. Over 500,000 Americans have died.
And yesterday it was passed, that bill that would see another $1.9 trillion being added to the US economy. So what impact will it have? And how does the US stimulus spending compare to the spending here in the UK? And which economy is going to come out of this the best? We'll look at all of that today. It's Thursday, the 11th of March, 2021. Good morning.
And now, it's The Business, making sense of it all with Phil Dobbie.
Yeah, I think this story about Greensill is going to gather momentum as we realise the full extent of it. But let's go back to the happy days when Lex Greensill, an Aussie in his 40s, was talking about his burgeoning company on Sky News. This is 2018.
They have injected $250 million as a combination of equity and debt into the firm, valuing us at $1.64 billion in equity terms, and is really something that sets Greensill up as being the best capitalised specialist supply chain finance provider in the world, and provides us with a platform to further expand the scope and the scale of our growth.
Now you've disrupted the sector. Do you worry that some of the traditional players in invoice financing will start to adopt technology in due course and start to fight back for business?
Well, frankly, in order to have a chance, they need to. The reality is it's an arms race that we find ourselves in today, and with the capital of General Atlantic, together with the other partners that we work with, we are confident that we'll continue to stay well ahead of the curve and innovate and deliver the solutions that the market needs faster than our competitors can do. But certainly the opportunity is there for the banks. The market, though, is enormous, and with $3.5 trillion of working capital required to support companies around the world, it's a big prize, and no one player has greater than a 1% market share today. So there's a lot to go after. It's not going to be a winner-takes-all kind of situation.
Well, listening to that, you wonder how they could possibly have failed. But fail they did, even though they had so much money behind them. What I don't get is this. If it's all about improving cash flow, getting the money to tide you over while you wait for your invoices to be paid, surely banks should be providing that. And if they don't, surely the government should be stepping in. After all, the government owns the British Business Bank. Why don't they use that? I mean, if the work has been done, the invoice has been issued, and you're just waiting for the money to come in, and so it's really just a short-term cash flow issue. If commercial banks won't do it, surely that's work for the government, isn't it? But we'll look at more of that with Steve Keen in about 5 or 10 minutes now. A year ago today, the World Health Organization officially declared COVID-19 a pandemic. Yeah. It was March the 11th. Remember, that actually seemed rather late in the day, didn't it? I mean, it was everywhere at that point. Here's Nancy Pelosi talking about it yesterday in the House.
Since that day, nearly 30 million Americans have become infected. Over 500,000 Americans have died. more lives that were lost in combat in all of America's wars against foreign enemies combined. Today, we have a real opportunity for change.
Well, since she spoke, the House passed the $1.9 trillion coronavirus relief package. That does seem like a lot of money, doesn't it? The budget deficit in the United States in the first 5 months of this fiscal year, so from July to November, had already topped $1 trillion US, the Treasury Department is saying. So that is more than $600 or around £440 per month per person that the government has overspent in the United States. Every man, woman and child per month, £440. Our budget deficit, by the way, if you use exactly the same calculation, but over the first 9 months of the financial year, that works out at £450 per person per month. So almost exactly the same as the deficit in the United States that's been brought about because of COVID-19. But here is the difference. The US is spending their way out of this thing, whilst Rishi Sunak is trying to slow down spending. Now he perceives the worst of it is over. So hopefully he is right. I suspect he isn't. But I mean, this stimulus package, it's going to be an interesting case study in years to come, isn't it? It's going to be an interesting, because again, if we use like for like comparison, this would be like Rishi Sunak announcing a £500 billion stimulus package, which is twice the deficit that he's incurred in the first 9 months of this financial year. Can't see him doing that, can you? So that gives some context to the bill, which had its final vote yesterday. It passed, so it's over to Joe Biden to sign. Now, this will be a formality with this president, not the last one, of course. Remember when bills would go to the House, to the Senate, back to the House, fairly rigorous debate going on throughout that, only to have President Trump refuse to sign it because he could. Now, the only thing he can decide on is what he's going to have for lunch. And the world is much better for that, isn't it? Not everyone is happy, of course, with this bill. After all, it is a lot of money. Here's Senator John Kennedy, for example.
President Biden has repeatedly said the House is on fire. It's an emergency. We have to pass this bill right now to deal with COVID and to deal with the shutdown and the economic crisis as a result of COVID. Okay, then how come only 1% of the bill goes to the COVID vaccine? And number two, how come most of the spending won't even start for a year? And you know, this is an example of why the aliens won't talk to us. You know, I mean, folks up here must think the American people are like a rock, only dumber.
I love that. This is why aliens aren't talking to Americans. It's because they think they're stupid. I love that. Or at least not stupid. They just perhaps have a different philosophy around economics. And so they could talk to us, but they've got no, look, they are a bit too Keynesian for us on planet Earth. Let's stay away from that. Tell you what, even if you disagree with right-wing commentators and politicians, you still got to love them because they are entertaining, aren't they? I mean, they are on this planet to entertain us. But look, those aliens might actually be saying, look how smart they are on planet Earth, or at least this big place here called America, because they're going to come out of this with people having less debt than they would otherwise have, particularly the poorer people. So now they can spend and inject cash into the economy. Here's Stephanie Kelton, economics professor at Stony Brook University yesterday.
This is a piece of legislation that recognizes the immense pain that exists all across this country, and it delivers help. I mean, President Biden has said help is on the way, and this piece of legislation is absolutely going to change the lives of tens of millions of people in this country, people who for the first time in their lives are going to see more money in their bank account at one time. They're going to be able to pay all of the bills that they have instead of trying to figure out which one to put off this month and how to try to catch up later. You know, the legislation is groundbreaking. There's no question about it. And yes, it didn't include everything that progressives had hoped would be in this bill, but you know, I think there is no denying that this is a major, major victory for the party and for many progressives who pushed very hard to make sure that the legislation sent the relief exactly where it was most needed.
Yeah, well, that's a relief that they're getting the right relief, isn't it? Meanwhile, I fear we in the UK are going to come out the other side with lots of debt, and that is going to delay spending, and maybe we'll have a much bigger rich-poor gap. Well, not maybe, we almost certainly will, because the effects, of course, are only really being felt by those on low wages, like nurses who've been told, well, effectively, they've got to take a pay cut. They've got a 1% pay rise that's going to be wiped out completely by inflation, and this 5-year suspension on the movement in tax brackets. The aliens, if they're worried about, if we're worried about what they think, they must be saying, who are these guys? Let's go and talk to the Americans. I wonder what the aliens think about Meghan and Wills, though. Maybe that would be a reason for them also to be staying away, because they'd be thinking, look, if we mix in with these people and one of us has a baby, then we're going to be worried about what colour the baby's going to be. Green? Imagine the prejudice. Stephanie Kelton, who we just heard there, has written a book, by the way, called The Deficit Myth, which is definitely worth reading. This is, you probably heard about modern monetary theory. The deficit myth gives a very strong argument why we should be considering this as the approach that we take about how governments can spend until you have full employment, and only then will you start to see inflation. And that's when you should cut back on spending. But even then, you might find that you are still running a budget deficit, and you shouldn't worry about this, which is, and we have, of course, in this country been running a budget deficit every year this century, bar one, I think. Even through all that austerity, there was only one time that we managed to balance the books. So maybe, we managed to get through. However much the government issues in bonds, which is how it raises that debt, banks particularly still seem keen to buy them up. And if they, of course, don't buy them up, as we were talking about yesterday, the central bank will buy them anyway. 38 billion in government bonds were issued in the United States yesterday. Were people prepared to pay the going rate? There was no collapse in the value of those bonds. There wasn't any reticence to buy. And this is happening all the time. Despite that, inflation is still going nowhere, even though all this new money is being issued. In fact, in the US, it fell slightly in February, inflation. And in China, inflation in February was down 0.2% year on year, despite another high level of loans. Not just government deficit, but also loans issued to people. Another 1.4 trillion yuan in February, on top of the 3.6 trillion in January. So people are borrowing money, and that increases the money supply, which is not causing inflation. In fact, the money supply year on year in China increased 10% without runaway inflation. So it seems that money supply isn't an issue. You should read Stephanie Kelton's book for more on this. And you should listen to the Debunking Economics podcast that I do with Steve Keen each week. And Steve Keen is with me today on It's the Business for this intriguing tale that's got many dimensions. The collapse of Greensill Capital, its impact on many businesses, including Liberty Steel, and the question mark hanging over steel making in Britain and whether we should just buy it cheaper from China. So let's start with Lex Greenhill, a 44-year-old Aussie. He was a sugarcane farmer from Bundaberg in Queensland initially, who smooshed the British society, British establishment. He became an advisor to David Cameron, who later became a advisor to Greensill Capital. He's got a bit of egg on his face over that. He worked at Citibank, this Lex Greenhill, and then set up his own finance operation, Greensill Capital. Their model was to finance the money you were owed by customers. So you issue an invoice, and rather than waiting for your customer to pay, Greensill Capital pay you straight away. In effect, what they do is they buy the invoice off you for slightly less than its value. So you get the money, they carry the risk, and they wait for your customer to cough up the money. So it's gets more intriguing when we look at how this relates to the British steel industry. But let's start with Greensill's business model. First of all, Steve Keen is, as you probably know, an economist who does this podcast with me each week, and he's also written many books on the economy and how economists have got it all wrong. But, Steve, this sounds like one of those business models that's fine when times are good, but they're carrying the risk. So, of course, when risk emerges, they fall apart.
Yeah, I mean, it's one of those. I can understand the appeal of the business model in the first place, because there are so many companies that have 30 days to pay, 60 days to pay terms, and then they've had work which they've done for another organisation, and they're going to wait 30 or 60 days to get the money. And if you've got your own cash flow issues, then you might think, well, if somebody's going to pay me, all but 2% of it, if I if I let them buy the invoice off me now, I get 98% of what I'm charging. That's better than the uncertainty of having to wait, wonder whether this money's going to come through, wait to get it anyway. So it's got a very strong appeal. And there's so much, effective notional money in here, in these what are fundamentally still credit relations between different people. A credit relationship is where you still have some commitment. When you pay something with money, that's the end of the problem. But when you do it with a credit payment, you are still liable to fulfill the credit at a later stage. So, yeah, it's tempting, but it's incredibly fragile, because one of the things that companies will play with when they get into difficulties themselves is cutting back from 60 days to 30 days, and that could bring this whole model unstuck, and that might well be what's happened here.
But also, you said yourself, if you're a company that's got cash flow issues, so you've got an issue to start with. I mean, if you were a carefully managed company, because if you bring forward a payment on an invoice, then that's fine. It creates, it turns that invoice straight away into working capital that you can use. But you are just bringing cash flow forward. Then you're going to issue another invoice. What do you go back to them again because you need to bring the next bit of cash flow forward? If you're carefully managing your business, then surely you would say, well, we know it's going to take 30 or 60 or 90 days for us to get paid. So we need to make sure we've got enough cash in the business, enough liquidity in the business to manage that. And we don't need to then discount on to try and get the money faster. I mean, so surely it's a mismanaged company that was, they're going to appeal to the companies that are mismanaging their funds. In other words, well,
it's actually a bit like some words that Smith once wrote way back. What do you think? Was Smith in favour of or against controls on the rate of interest?
Well, I mean, he was a pure economist, so he would want no control, wouldn't he? He was and
that's what everybody thinks, and that's in fact the exact opposite of what Smith thinks, because he said that the person who pushed for the idea of no controls whatsoever is actually Jeremy Bentham, and I see Bentham as far more responsible for the state of modern economics in that sense than Smith is. But Smith said that you would want to have control set on the maximum rate of interest because in most cases the rate has to be set with respect to current economic conditions. He said anybody who's willing to pay more than that rate is most likely going to be a prodigal. Now, of course, whether you think about the prodigal son, well, the prodigal son was good when he came home, but not so crash hot when he left home. And this is what he meant by prodigals were people pushing schemes like the South Sea bubble.
Right.
And they're the only ones who've got a desperate need for money, and therefore are willing to offer you a huge rate of interest, well over what any sane person would do. What Smith is saying, this just basically encourages irresponsible business behaviour, and a control on the maximum rate of interest makes a lot of sense individually and macroeconomically.
So do you think Greensill was doing the same thing? It was.
Well, they're doing what Smith is trying to prevent. Yeah, that sort of stuff is irresponsible. Potentially, it's only responsible everything's working perfectly.
Yeah, which, as it turned out, well, they grew very quickly. So you've got to always be cautious of that. So they've only been around, a few years, but 143 billion in financing in 2020, 10 million customers and suppliers, 175 countries. I got this off their now defunct website. They are the leading non-bank provider of supply chain finance. They've got a term for it, supply chain finance. So creating liquidity in supply chains is the gist of it. So why wouldn't, first of all, those are big numbers, aren't they? 143 billion of financing. Why wouldn't regular banks be doing this? Why, if I needed cash flow, wouldn't I be in a position just to go to my bank and say, hey, look, I need cash flow. These are this business has been done. The invoices have been issued. It's just a cash flow issue. Help us out here. The answer, of course, is because Greensill will come along and say, because the bank probably would say that, but they'll come along and say, well, we'll do it cheaper than a bank. And that says something as well, doesn't it?
Well, in fact, I think you can actually take this right back to the history of the evolution of the approach to banking and money that I take, which is called endogenous money. And for those who don't know the jargon, what that means is modelling banks creating money when they lend, whereas the mainstream pretends that banks don't create money when they lend. We know the Bank of England's kicked the mainstream in the backside and said the rebels like me are right and the mainstream is wrong. Banks do create money when they lend. And when this thing was first being put forward as an argument against the mainstream way of thinking back in the late 70s, as it happens with the American economist or Canadian economist called Basil Moore, one of Basil's main elements of showing that banks create money by their lending processes and that what the banks do matters. Therefore, his example of a bank creating money was actually a line of credit. and this is quite common if you go back to the 70s and even the 80s, banks would offer a line of credit to a company. So the line of credit would say, we give you the right to borrow, say, up to 100, let's say it's a reasonable sized company, up to £100 million at any point. It's like a credit card overdraft, and you can access that, no questions asked. And the point that Basil made at that stage, well, because that's like, between 0 to 100 million, if you're at the 0 level and the bank and the company's already negotiated this line of credit agreement, and it wants to pay a supplier or pay an invoice or pay wage increases or pay for higher raw materials costs, it simply does it, and there's nothing the banks can do to stop them doing that.
Yeah.
And that's one
or
way,
in this case, to cover their cash flow because a supplier is slow paying.
Yeah, but the banks have stopped doing it because it wasn't profitable enough for them.
Yeah, even though it's money they create. Because that was because Greensill can't. They're a non-bank organisation, so they can't create money in the same way that banks can. So they've they've got to balance their books somehow. So I'm sure there were other financial institutions involved somehow, because it seems like a pretty murky, well, not murky, maybe that's unfair, but a complex picture. So, but banks could do this easily. But you're saying they don't do it because they couldn't make money, but they make some money.
Yeah, lines of credit were it's so substantial a part of the business of banking back in the 60s and 70s that was the illustration that Basil used of the way that the monetary system created money. Rather than the money supply being controlled by the government, it's controlled by the banking sector and by the interaction the banking sector has with the non-bank public. And the thing is, lines of credit were a very common thing there. Banks are basically, we can make more money out of financing asset bubbles, not that they call them that, housing loans, all
can't they do both? Can't they do?
They can, but they've given up on it pretty much. I haven't taken a look at stats on this. I should have really taken a look and compare. But fundamentally, this is something which businesses do need. You do need a buffer that means you can pay unexpected expenses, you can pay things rapidly if you need to, and then you can adjust it back in times when times get better. So a line of credit is a very useful thing for a bank, but apparently the banks put up the prices of it so much and became less willing to do it as well, that most corporations thought not worth our while doing it, and so that's how you got the development of what's called the commercial money market, or commercial bonds, not commercial bonds, but commercial paper market, where companies like General Motors would issue a note which would have like a 30-day or 60-day term on it, and issue that and let people buy it at less than face value and get it back at face value later. That was a large way they raised money literally to pay wages. So what used to be done by lines of credit then became done by this commercial paper market. Now, of course, the commercial paper market became pretty lucrative, and a little firm called, I think its name was Lehman Brothers, decided to corner the market on that, and when Lehman crashed, that's why people were so panicked in 2008, because within weeks or less, companies like General Motors wouldn't be able to pay wages at all. So this is a sign of the fragility that we get out of the financial sector, and this is another case of that fragility.
Exactly, and people working for Liberty Seal almost certainly not going to get their wages paid, and this is it's tortuous, isn't it? The path in all of this. So my understanding is that the money that when you sell those invoices, they're actually calling them securities. So when they actually recover the debt, they're calling that an investment because people are buying those securities. In fact, they're actually just paying the invoice, but they're calling it buying. They're buying the security that's been issued, and so that's an investment in their company. And because they've got investments, then that gives them the ability then to say, well, okay, now let's branch the business out a bit further, and we'll start offering loans. And I think that's where they came unstuck with Liberty Steel, because they gave loans to Liberty Steel. Now, they followed the government's coronavirus large business interruption loan scheme for a chunk of it, which gave the government the ability to issue loans through other institutions. Why they didn't just do it through the British Business Bank, which the government owns and operates, I don't know. But anyway, the British Business Bank administered it through other lenders. So they were one of them. And then there must have been something dodgy about the way Greensill was operating, because the British Business Bank said, actually, we refuse to underwrite this. We're underwriting it for everyone else, but we're not going to underwrite it for you because we're a bit worried about the way you're operating. The loans that were given to Liberty Steel amounted to, are you ready for this? £3.6 billion. And now Greensill has filed for administration. So the question is, how much is Liberty Steel going to get back of that $3.6 billion?
Yeah, and it could be very little. So, and this is, finance is often described as the oil on which, the lubricating oil on which capitalism spins. And this is a case where the oil's been cut down to the stage that the pistons have frozen.
Yeah. So we wait and see what happens. Look, the other side of this is Liberty Steel. So back in 2019, suppliers to Liberty Steel were very concerned about getting paid. So they were demanding cash up front. Now, I'm not reading more on this. I'm not sure, but I'm fairly certain this is where Greensill would say, "Well, okay, we'll get in and we'll work for your customers. We'll pay off those invoices, which will have been counted perhaps as part of that loan to Liberty Steel." This is where it gets complicated, doesn't it? How much of it is the terminology that's sitting behind this? But it doesn't get over the initial concerns. If they did step in as an intermediary, it didn't get over the initial concerns of those suppliers who were worried about Liberty Steel paying their bill. But clearly, Lex Greensill's company wasn't. So it's managing risk, isn't it? They obviously overstepped the mark.
But it's also promoting risk, and that's one reason Smith was against letting finance be a free agent in the economy. He wanted finance controlled, and the reason was this sort of behaviour happens all the time because even though, like you and I were talking about this, we're looking back in retrospect where it's already crashed. On the other side, if you're selling this to somebody else, all you sell is the upside. You say, what a fantastic opportunity! There's all this cash that sits in the 30 to 60 day terms between various companies needing the money more rapidly. The banks have stopped doing this so we can move it on the market, etc., etc. It's a great positive sell job, but it comes crashing down when the terms tighten or an event like COVID comes along. This is partly what knocked off long-term capital management back in 97. They had a strategy that presumed that all deviations from an equilibrium would return to equilibrium, and then they got hit with the Russian default, and everything went further away, and they were wiped out completely. So these things, you can see the black swan coming. It's just simply if you don't believe that the world's going to be perfect from now to eternity.
So it was a complex instrument, clearly, because it's very hard to decipher who is exactly liable for what in the midst of all of this. Is going to be a difficult thing to untangle. I think now it's gone into administration, which it has. The other character in this story is Sanjeev Gupta, who's the Indian-born businessman who started his career trading in steel and other commodities, then decided, well, what's the difference between doing that and operating steel plants? So he started buying them, and he bought the mothballed steel plants in the UK off Tata Steel. He also bought the Whyalla Steelworks in Australia as well. You'll be interesting to know, and several sites in the off BHP, and several sites in the United States as well. So he's been buying up big as well. At the end of all of this, at the very least, I mean, it looks like he's going to have to close his UK steel plant. So the question is, should the government get involved in this? I mean, or should they bail it out? Should they buy them back? Should they give a loan to Sanjeev Gupta's business to try and keep it going? Where does the government step in on this?
Well, I think where you step in is getting rid of the trend towards globalisation, because I think we're seeing now is a fairly dramatic unwinding of the whole push to globalisation, which was driven by the whole neoclassical economic belief in comparative advantage, that it was actually wise to specialise in what yours have a comparative advantage in and not do it. So you let the steel move to China, where China obviously has a comparative advantage in steel. Just look at what they did during the Great Leap Forward. Of course, the reason people moved their steel mills to China was cheap labour. And you therefore cut out the workers back at home in America and the UK, paid Chinese workers a damn sight less, put in the same capital technology in both locations and made a mozza. But it works as long as the supply chains keep on working. We haven't yet seen anybody saying you can't have our steel anymore, but part of the fun and games over vaccines, for example, is countries saying you can't have our vaccine anymore, we're not going to export it to you, we're going to keep it for ourselves. The globalisation relies upon the absence of shocks to the global economy. Well, good luck with that one.
Yeah. Well, we used to, of course, we used to specialise in steel. We used to be the world's biggest producer. Now we produce 7 million tonnes, 2018 numbers. We produce 7. China produced 7 million. China produced 930 million. So we've fallen by the wayside, and we might be losing that. We might be losing that 7 million. So, are you saying we should?
And you can't compete with the prices the Chinese put forward, which is a reason in favour of protection, because there are some industries you don't want to lose the capability and then find that you can't do the imports at some point in the future, and that is what's. I think anybody in future arguing we should outsource the production of personal protective equipment, for example, to another country. No, that's not going to happen again. You want to produce it domestically. And the same thing should apply to something like steel, which even though we're talking about modern, new technologies coming along like carbon fibre, Elon Musk goes and shows that steel works better for spaceships. So you don't want to lose the capability entirely. You don't want to become de-skilled. But that's what the UK has let itself become.
Yeah, well, and we want to build the HS2, for example, and modernise our rail infrastructure. That's going to be another use of steel, I'm sure, and windmills, I don't know whether carbon fibre versus steel for all of the wind farms that we want to run off the coast of Great Britain. There's all that too. So, I mean, there's certainly demand. So is that what we're saying, that we should, that is the opposite of global Britain, isn't it? That was what we were sold to on Brexit. And in fact, that's what we're talking about on our other podcast this week. So maybe we should leave it there and tell people to go and listen to that. But, I mean, protectionism is the opposite of where the government is right now.
Yeah, well, the point here is that we've got a case of financial fragility causing not just a collapse of a financial company, but also potentially a collapse of a manufacturing company, and the whole focus upon efficiency and low cost, etc., pushes efficiency and low costs at the cost of resilience. And I think we're realising now that has gone far too far. We need to have economies and social systems and ecological systems that are resilient, able to cope with a shock, like, for example, like a pandemic, for example. And we're not. We've built economies that are so finely attuned to everything working well that they're smashed for six whenever a change like this, a disturbance like this comes through. And this is just the beginning of the disturbances. So I think it's time to throw globalisation into history's dustbin.
Yeah. And I mentioned the British Business Bank. I mean, should they just have more direct involvement as well? I mean, if we've got a business bank that's owned by the government, should they be doing the sort of stuff that Greensill was doing? If there's companies that need help with cash flow, isn't that precisely where we'd want banks, a government-owned bank, to step in to keep those industries alive?
Well, what you need, to some extent, certainly for entrepreneurs, is lending that can cope with people losing money and going bankrupt, because it's the old saying about research: if you knew what you're going to produce, it's not research. The same thing for innovation. You don't know which innovator is going to succeed, so you've got to fund a few and expect to lose and be able to cope with losing money. So that's the sort of thing which a government can do. That's what Mariana Mazzucato emphasises, the government's role in innovation. Equally, it's what wealthy people can do, which what Bill Janeway talks about. But yes, there is a role for the state to support the development of entrepreneurial behaviour. What people worry about, it becomes a buffer that means that even ineffective ones don't fail. That's one of the clear dangers. But I'd like to see the government providing more of this sort of risk finance and startup finance, and expecting some of it to be lost, because that's a sign that you're doing, potentially a sign that you're doing innovative work with that money.
Right, so long as it's innovative work, making stuff rather than just creating financial instruments, which is what this country has shown itself to be extraordinarily good at and paying the price for, it seems. Good to talk, Steve. We'll catch you again very soon. Thank you.
Welcome. Bye.
Well, tomorrow we're going to look at one area where banks are prepared to lend, and that is for housing, in particular for the buy-to-rent market. Are we going to see a lot more of that coming out of COVID-19? Russell Quirk is going to join me to talk about that tomorrow on the podcast. Join me again. You can subscribe, of course, where all good podcasts are. We're there too. Or you can find us at itsthebusiness.co.uk. I'm Phil at itsthe.business if you want to send me an email. And don't forget to tell your friends as well. The more the merrier. Back again tomorrow morning. I'll see you then.
It's the Business with Phil Dobbie. Listen online at itsthebusiness or wherever good